So I will be doing my presentation on the Fortune 500 company AT&T. AT&T very recently became considered a communications and entertainment conglomerate with a few acquisitions. And while last year their profits dropped 28% due to merger costs, pension charges, and changes in the value of some of their assets, their new assets are clearly shown to help them in their Q1 financial report. So in this financial report, AT&T's total operating expenses totaled approximately $36.28 billion, and their total operating revenue totaled approximately $43.94 billion. So that totals about a $7.6 billion income after taxes. Now, if you look at their revenue of $43.9 billion in comparison to their Q1 revenue last year's was at about $42.8 billion, so that makes it up about 2.7%. And that's mainly due to mobility and the Warner Media growth. However, if you think about it, last year's Q1 was the start of the pandemic, especially towards that end of March. They were more likely a lot lower last year than in 2019, so it makes sense that it's up. And when I mentioned mobility before, that being a reason that they were up for AT&T, this basically means the monthly subscription solution that bundles mobile connectivity, accessories, and services. This is their main revenue stream at $19 billion, and in 2020 Q1, that mobility was at about $17.4 billion. So that mobility is up 9.4% from last year. This quarter, they also added U.S. wireless users. They added 3.6 million users that they were not had before. And in December of 2020, AT&T dismantled their acquisition of Time Warner, and they took over HBO and created HBO Max. So they currently have 63.9 million subscribers for that service. Their ARPU, or average revenue per user, is around $11.72, meaning they make around $748.9 million just from HBO subscriptions in that first quarter. So one of the downfalls they had in Q1 in comparison to last year was their adjusted EBITDA stands for earnings before interest, taxes, depreciation, and amortization. Thankfully, it's the last time I have to say that. Because it's their net earnings without taking away the taxes and interest and other governmental investor expenses, in 2019, their EBITDA of $14.2 billion, and this year is at about $13.6 billion. So that was down 4.7%. But they noted that there's an ongoing video impact and that they're putting significant investment into the HBO Max subscription, which is one reason that is currently lower from last year, but they expect by the end of the year for it to be much higher, and if not higher than last year. So they also noted that mobility grew from last year for the EBITDA, and the HBO investment still pulls that down. So this quarter, they had a net add of U.S. wireless users of 3.6 million. And so if you read their Q1 investor update on their financial report, they had a few main points they wanted to touch on. Their main market focuses as of right now are broadband connectivity in terms of growing 5G, software-based entertainment in terms of growing HBO Max, and they noted that they have fantastic storytelling. They were the industry leader in 2020 Emmy wins, and they want to continue that. So their 2021 priority, it's the same as it was prior to the start of Q1, and that's to grow customer relationships, whether it be for HBO, for just AT&T Wireless, AT&T DirecTV. They just want to grow their customer relationships. And finally, their deliberate capital allocation will go to four main things: investing in strategic growth, such as 5G and HBO Max. They are committed to sustaining the dividend at current levels, and they are utilizing their cash after dividends to reduce debt. And finally, their continued portfolio review. They want to restructure non-core assets. So that's just a little bit about the Q1 financial report for AT&T. Thanks.